Yeah. For those of you that want to know what we're all about, it's like this, y'all.
Support has failed and the market is breaking down. But in reality, it's a liquidity grab. Market makers use the liquidity from your stop losses to buy at a discount and fill their positions. Then the price reverses sharply and moves higher, just as you originally expected, but now you're out of the trade and the market makers have capitalized on your loss. Now let's look at resistance. You spot a level where the price struggles to break above, and it looks strong. You think, this is the perfect spot to sell. You enter a short trade and place your stop loss just above the resistance level, expecting it to hold. But just like with support, market makers use this resistance level to
Kasongo ye Mombali nanga Kasongo mbona we Songa libala Oh ye Kasongo ye Mombali nanga Kasongo mbona we Songa libala Oh ye Kasongo ye Mombali nanga Kasongo mbona we Songa libala Oh ye Kasongo ye Mombali nanga Kasongo mbona we Songa libala Oh ye Kasongo ye Mombali nanga Kasongo mbona we Songa libala Oh ye Kasongo ye Mombali nanga Kasongo mbona we Songa libala Oh ye Kasongo ye Mombali nanga Kasongo mbona we
confirmation. For a bullish setup, the next candle must close above the range candle's high. For a bearish setup, the next candle must close below the range candle's low. This confirmation is the final piece of the puzzle, telling us whether the market is ready to reverse or continue in the same direction. Without this step, the setup is incomplete. This strategy works so well because it takes advantage of the common mistake traders make, entering too soon during the formation of a candle. When traders see a breakout mid-candle, they rush to enter the market expecting the move to continue. But when the candle closes, it reverses and traps them in a bad position. This is why waiting for the candle to close is so important. It saves you from getting caught in these false breakouts or closure traps. Now, let me share an important variation of this setup that can make it even more reliable. Multiple inside candles. Sometimes, instead of just one inside candle, you'll see several small candles forming within the range of the first candle. These additional inside candles indicate that the market is in a prolonged consolidation phase. Why does this matter? Prolonged consolidation builds energy in the market. The longer the market stays within the range, the stronger the eventual move is likely to be. This means that when the fakey candle forms, it's even more meaningful because it follows a period of indecision. Think of it like a spring being compressed. The more it's squeezed, the bigger the release when it finally breaks. In this case, the fake out and confirmation that follow are even more reliable because they're backed by stronger market pressure. So, if you spot multiple inside candles in a fake closure setup, it's a sign that the setup is gaining strength. Always wait for the confirmation candle to validate the direction, and you'll have a higher probability trade on your hands. Alright, let's walk through some real chart examples to see how the fake closure candle strategy works in live markets. Here, we're looking at the Solana daily chart. First, we have the range candle. This defines the market's high and low for the day. We mark the high as resistance and the low as support, creating the range. Next, we see the first inside candle, then a second, and finally a third inside candle. All three candles are completely within the range of the mother candle, indicating consolidation. Now, here's where things get interesting. This candle forms and breaks below the range during its formation. To many traders, this looks like a clear bearish breakout and they enter short trades immediately. But here's the twist. When the candle closes, it moves back inside the range. This is a closure trap, showing that the breakout was false. Does that mean we take action right away? No. We still need a confirmation candle. The next candle breaks above the range, confirming the closure trap. At this point, the market is likely to move higher for the next 2 to 3 days. As you can see, the market moved up strongly because the fake-out candle also swept liquidity below the support level, trapping sellers. This liquidity sweep
Let me ask you something.
However,
Dan, tell me also something else.
Yeah.
Okay, I have heard some